ચાલુ થયો. Good morning. Welcome to the Trade Setup right here on Bloomberg Quinn Live. I'm Neeraj Shah, and interesting day of trade in that there's a bit of a reversal from yesterday's large optimism, but we'll get to that in a moment. First, what happened in the US markets, and probably that's what leads to this optimism getting reversed a little bit as well. If you just see what happened in the US markets overnight, Dow, S&P, and the Nasdaq in particular wilted really in trade and came off really, really strongly. Now, what's happening as a result of tech keeping on losing is that not only the Nasdaq is coming off, but the tech weightage in the other indices. So we probably see that in India too. But for example, there's this chart which shows how the tech-heavy index share of the S&P market cap has fallen. It's still lost only some bite and not all, as the chart suggests. But there's a bit of a downside that is coming as a result of that to tech per se, which is why I think that tech in India too is a bit subdued and not quite doing really well. That it is expensive compared to what the mean is another story altogether. But not only consumer tech, but IT services too has wobbled right in the last 3 or 4 odd months. And we've had multiple people say that they're not very, very constructive. Though there are odd lots out as well who are saying that they are. Hiren Ved, for example, in trade yesterday or in the commentary yesterday said so. Now, as a result of what the US markets did, Asia starting off mixed, but largely with a negative bias. And you would probably see SGX Nifty come up on the screen next. As you can see there, first Asia, largely a negative bias. So that is one. And the SGX Nifty will come up on your screen next. And there's a bit of an uptick yesterday that gets sold into in the session today. We're back to circa 17,000, which is why even now it doesn't look like that the market is ready for leverage longs. That's the limited point we've been making all through. You'll get flash trades. I think I'll jump straight to the trade setup. To my mind, I think it's prudent to not carry on large overnight calls because this is not a trending market. It's turning out to be a flippant market. You don't quite know what will happen the next day. Just as you think that the trend is getting built, it succumbs to some selling pressure. I read all the technical notes and they were not wrong, by the way. In their wisdom, they are right that, okay, because of the move that we've seen, could we nudge 17,300, 17,400? Sure, we could also, by the way. But think of it from somebody who doesn't have very strong hands. And a lot of retail guys don't, right? I mean, if there's a 200-point fall on the Nifty, the MTM is large enough. So you don't want to carry very large overnight positions unless you're completely convinced on the bottom of basis on specific stocks. Now, think of it today. 17,100 had emerged to be a strong support technically. But is there any sanctity to it? No, there isn't, because we'll probably start off below that. And in light of higher VIX, both India and globally, as well as the higher DXY, these falls could come in very, very easily. So just keep that in mind. And much as banks are seeing selling, but they remain in focus as large dips will probably get bought into. Look at the results that are coming in. I mean, today we'll talk about AU Small Finance Bank as well. Just financial numbers are looking very, very strong. There's also the LIC IPO to contend with. Bloomberg reports it'll open on May 4th, close on May 9th at a price band of about 902 to 949. Policyholders, retail bidders all get discount. 10% of the IPO will be reserved for policyholders. So all of that is great. Will it make fun? Is the question. The other point also is that much unlike the previous assumptions of how LIC will take away a chunk of the secondary market money, that may not necessarily be the case, which is probably not a bad thing either from a secondary markets. In light of all the FI outflows that are happening, we can do without too much of money being blocked by an IPO as well. It's a decently busy earnings day in India. Bajaj Auto and HUL, so one, I think both during market hours, if I'm not wrong. So from between 12 to 3:30, it will be a slightly busy afternoon. But besides that, also some interesting names. So Persistent, after, I mean, it's been probably the best performing fundamentally, I'm saying, in terms of earnings growth and revenue growth, probably amongst the highest ones. Let's see if it stays in that range or does it do slightly better than peers. Trend would be very interesting because of the run up that it has seen. as also Indian hotels. The opening up theme has been played very well. Can it do well in Chennai Petroleum? Needs no introduction. Really, MRPL and Chennai Petro have been on a bit of a roll. So some fairly interesting names at the broader end of the spectrum, which should be kept an eye out for. Flows were tepid, 1174 crores outflow and 1600 crores inflows, so nothing to write home about. A lot of stocks which could be reacting and therefore pertinent to bring them out. So firstly, strong show by Bajaj Finance. The market needed that. The stock needed that with the kind of numbers or the kind of levels that it trades at. So the net profit at 2419, the estimates were 2438 crores. So largely in line with estimates, even on the total income front, largely in line with estimates. I've given those numbers as YOY, just chosen to compare the gross NPAs and the net NPAs QOQ to try and figure out if it's trending lower, and it certainly seems to be doing that. But 1.6 is not a terrible number compared to what the erstwhile history of Bajaj Finance was. It sure is higher, but I think at 1.6 it's okay. So quarter on quarter, the asset quality is improved both on the gross and the net NPA front. And on a YOY basis, total income, of course, higher than what it was in the corresponding quarter last year, but largely in line with estimates, you would have to say, but a strong showing nevertheless. Which is why Jeffrey's note is interesting. I'm bringing that as opposed to Morgan Stanley or a CLSA, but I thought they summarized it very well. So the rating is a whole. They've upped the target price to 7,600 from 7,200. They say better core trends were offset by a commercial NPL, but and that's as far as the quarter goes. And as far as the commentary and what the company is likely to do, they're investing in physical and digital platforms aimed at aiding growth. I will soon see the Bajaj Finance super app in the market as well. They're saying that the NBFC is not keen to look at bank conversion for at least 2-3 years, which should address any overhang. Remember, conversion to a bank comes with its sets of challenges on some of the key ratios which people look at from a growth perspective, and that would pose a challenge to Bajaj Finance continue to trade this 8-9 times absolute book value or adjusted book value. So keep that at the back of your mind. That it is not happening is probably a good sign. They say that growth is stronger, but it's well priced at the kind of valuations that it is trading at. So, I mean, 8.5 times adjusted price to book is not cheap. It's amongst the strongest or the most well-priced NBFCs. If Growth Finance was still listed, maybe Growth Finance would still have that mantle. But aside of that, I mean, Bajaj Finance and maybe one or two others, but yeah, Bajaj Finance amongst the large ones remains the most pristine on the pricing front. Even the likes of HDFC Bank have come off on the valuation front, but this one continues to find favor with investors. So good going there. HDFC Life came out with numbers yesterday. I thought the CLSA note summarized the call and the earnings well. So they say that they've maintained a buy with the target price at about 700. It's been cut to 700. It's the strong VNB performance from the insurer, and it's guided to maintaining its VNB margins, including Exide Life, which is great. Yes, it was a tough quarter for AP growth, partly due to a high base, but they expect the ROEV of about 18 to 19%, and they believe that the risk reward is favorable. For the longest time now, HDFC Life has not created wealth for investors. Remember, it's kind of languished. It's not quite done well. Not that other insurers certainly have, but HDFC Life most certainly hasn't. Could this now be a time for change? Let's wait and watch. AU Small Finance Bank, the numbers look okay, really. NII at 43%, net profit up 105, gross NPAs improved materially, net NPAs improved materially, recommended a bonus issue as well in the ratio of 1:1. Again, the challenge for AU Small Finance Bank, compared to some of the others of its size and stature, is the valuation that it trades at, but the numbers leave no room for complaint. Again, Macrotech is the other one where the numbers seemed okay, by the way. Revenues up 36% at 3,444 crores. EBITDA up 7.8% at 871. EBITDA margin at 25.3 versus 32, but these can move around a little bit here and there. Net profits growth was strong as well. And if you look at the other finer points in Macrotech, so firstly, the revenues and the bottom line and everything else looked okay. They've delivered strong delivery, 2.8 million square feet and pre-sales of 3 million square feet, which aided the overall collections and kind of keeps it in good stead for the quarters to come. The India net debt declined about 6% quarter on quarter at 930 crores. They expect to repatriate about 1,500 crores or more surplus cash flow from the UK business in FY23 to India, presumably for reduction of debt, so which is also a good sign. The one problem with macro tech numbers that I saw was that the new JDA formation came to a standstill. It was fairly large for the first 9 months. No joint development agreements formation in the quarter four. But others have had that. Prestige has had that. Godrej has had that. So is macro tech, was it a one-off quarter issue, or could it be prolonged? That's the small pickle, really, when it comes to macro tech numbers. But otherwise, seemed okay. UBL, not much to write home about. It seemed to be a okay quarter. Revenues are up 1.3%, EBITDA margin at 7.13. Remember, one, of course, the statistic that the volumes were above Q4 FY20 but below Q4 FY19. People are trying to normalize the assumptions or the performance from some of these companies. So instead of comparing them to COVID quarters, which was FY21, trying to compare them to pre-COVID quarters. But be that as it may, the larger point I'm trying to make is, and of course, their gross margins at 48.7% contracted a little bit YOY and QOQ due to inflationary pressures on raw material prices. Interesting to speak to Rishi Pardal to talk the management tomorrow to try and assess what how are the pulls and pressures on the business. But the point I'm trying to make is, viewers, it may be marginally above some people's estimates, but not a blowout quarter by any stretch of imagination. So bear that in mind. Schaeffler, I thought, was interesting. You typically expect these companies to have some margin pressures, but no, 19.7% versus 16.2% YOY margins, despite all the input cost pressures that India Inc. is seeing. I thought, again, standout quarter, so to say, for me. Pretty good going. The asset management companies' numbers weren't the best. Aditya Birla, Nippon, UTI, fairly lackadaisical. If anything, UTI AMC numbers were very poor simply because the profit after tax fell about 59%. It's an illiquid stock, but may have a bit of a gap down. So keep that at the back of your mind. And then some news flow around Reliance and Wipro. Reliance will enter into a joint venture agreement and construct some chemical related ventures that Reliance is doing. Total investment about $2 billion. Doesn't seem large from a Reliance perspective, but from a chemicals industry perspective, fairly large. So the big boys doing that in the Middle Eastern region, and Wipro has done a decently large acquisition, $540 million for a SAP consulting firm. A lot of companies have this expertise, and if whichever don't have, try and get this expertise via inorganic moves. And Wipro has now done that. So watch out for this one. Maybe the two of them react a little bit. I don't know. But largely, with the markets poised to do what they're doing, it will be very difficult to assume that aside of maybe an AU Small Finance Bank or maybe a couple of others, maybe a Schaeffler, uh, don't quite expect fairly large reactions or pronounced reactions, at least in the first half of trade. Things may change later on, but the start certainly does not look all that great. So trade safe and think about it. Don't necessarily carry fairly large positions overnight, because these days the global markets are very, very choppy, and you stand a chance of getting cut either direction because you're carrying home the position as opposed to booking profits on the same day. It's a thought, it's a point worth thinking about. Thanks so much for tuning in. Stay safe. Have a safe day ahead.